Canadian exports are suffering from weak foreign demand and a strong Canadian dollar. But now that the Canadian dollar's value has dropped below the greenback, exporters are expecting a boost. As Kristiaan Yeo reports, Canada is looking towards emerging markets for that boost.
Perhaps Canada's best-known export, after maple syrup and ice hockey, is crude oil. But when it comes to Canadian services rendered around the world, the tech industry is on track to lead the way. Telecoms and IT services were worth more than $2 billion to Canada between April and June this year. That's more than financial services, insurance or research and development. In Canada's technology community, the twin cities of Kitchener-Waterloo, e-learning firms like Cleveru Corp and Desire to Learn are aggressively targeting emerging markets like China.
We've got clients in, for example, all over Singapore. We have clients in China. We have an office now in Singapore, in Australia, in Brazil, in the UK, in Europe. So our growth comes from serving an international population.
The key to success overseas, they say, is to pay close attention to the needs of the market, which might be different to Canada's.
The more we understand how China works and what China needs, Canada's a very receptive country where we listen hard and we encourage people here to respond in kind that says what they really need is this. What can you do to help?
Canadian business owners say exporting to emerging markets has become all the more important since growth in North America and Europe has stagnated. But it's by no means a guarantee of overnight success.
I think on an export basis, we look at the performance of emerging markets and it's still strong, but it's not what it was only 2 or 3 years ago. We're out of double digits in China and we're down to 6%, 7% growth, which is enviable, but it's not double digits.
Despite the recent slowdown in China, it remains an attractive target for Canadian service exporters.
We would kill to have anything like close to what their slowdown rate is. So I think you put everything into perspective and say, are they really slowing down? Well, compared to what? Compared to what they were doing a year ago, that's almost hyper-growth.
Canada prides itself on being less about domination and more about collaboration. And that may serve this country well as it looks to expand on its exports boom beyond oil and maple syrup. Kristiaan Yeo, CCTV, Toronto.